Let's do some trading and let's talk some markets. Alan Uckman joins us, Chief Market Strategist at bullseyeoption.com. He's got his blue jeans on and he is ready to trade.
Hello and welcome, Alan.
What's up, Alan?
To be honest with you, I don't think I own a pair of Levi's. I think I was gifted a pair, but
the classics,
we'll talk about that in a second. But
I actually think I did wear mine in today.
Jeff's commentary first is, we talked about Snap a couple weeks ago, and that my money flow indicator was seeing some long leverage accumulation there. So maybe somebody's on the track for Snap to participate with this TikTok. So we'll have to see. It'll be very interesting. And that's why I use limited risk options to position there. But looking at the market, we've tested this recent swing low. Let's see where we are in the next couple of days. But if we test and reject, we could see another run to the upside here. The VIX is sitting at 20. But back in December, I think it was December 20th when we originally got to these levels, the VIX was way up at 26. So we're seeing a bit of divergence. Even though the market's making new lows, we're not seeing the VIX make new swing highs. So that can be a very positive sign. A test and reject. We'll know a lot better by the end of today and tomorrow.
Okay. All right. So right now, volatility creeping up a little bit.
Little.
Yeah. A little.
Coutinho.
Yeah. Which you kind of, last time we talked, you were a little bit more hesitant on the market. You weren't quite your usual bullish, gung-ho self.
Well, I'm always gung-ho. There's always a bullish play in the markets. And the play recently, obviously, has been crude oil. I've been disappointed and hurt over and over by crude over the last 6 months. And this time it looks like it's real now that we're back above the 75 level. So a lot of these energy stocks have bottomed out and they boomed. So we've got some great opportunities in these energy stocks here. I think that's a sector that's ignoring everything else when it had been ignored for the longest time.
Okay. WTI ramping up, not bad, almost $78. All right, so how come the blue jeans, Levi? What do you like about the stock, Alan?
It's strictly a money flow play. I'm seeing leverage long positioning and options in this stock for whatever reason. It's not my job to know why, but I'm following the money. And you're seeing that here over the last couple of weeks. It's made a nice bottom base. We've been between 15 and 30 for the last 4 years, but recently we've been between this 15 and this 20 level. There's a gap up above 15 and 20. The midpoint of this is 1750. We were just sitting right there. So a pop above that should send it just to 20. This is a stock that's about 25% off its highs from just last June, so it's got risk reward on its side. And it's just this chart setup. I'm not seeing the bullish divergence on that low that we had just recently. Because if you go back, I like to look and measure a year, and it hasn't made new lows in the last year anyways.
Okay. All right. So it's been kind of making lower lows on the chart, though. That doesn't scare you?
Well, it's also been making higher lows as well, depending on the time frame you look at.
Sure, yeah, so, I guess if you go since November.
Right, it's risk reward, and it's got a similar chart to we've seen a lot of this stuff that had been forgotten about, Abercrombie & Fitch, Gap, things that we don't really watch on a day-to-day as a trader, but at some point, some of these stocks find some value. It's got a PE of 15, and so we've got earnings coming out. I think that could be, one of the catalysts for the overall market. And that's kind of what, we've been on pause here for the last couple of weeks, just waiting for some fundamental facts. And I think when we start to see these billions in pure profits hit the tape, I think the market's going to get a little wake up, and that'll give me my bull outlook once again.
Yeah, right. So you're buying the 15 calls, but you're not putting any in your wardrobe. I think it'd go nice with the gingham, Alan. I think the jeans would go very nice with the gingham.
If we want to get into my fashion, I've got a very
eclectic,
unique body type. So Levi's are not as flattering as some other pants are. If you want to get into that, but thank you. So I'm looking
at all those
15
chicken ribs.
Call, which is 15 call that's $2 in the money. Stick to business. $2 in the money, and so we're trading about 275 right now. So the expiration break even on 75 cents away. It's got 4 months of time. It's the drill that we look at and put ourselves in position for a modest move in the underlying stock. Now we do have earnings in about 10 to 15 days. Now it's not an earnings play, but earnings could be that catalyst. I mean, look at a stock that that nobody liked last week, I think, was Walgreens. I mean, Walgreens obviously very, very oversold, had that bottoming base, had that bullish divergence, had that leverage long accumulation. And, you know, when it did have anything positive, all those shorts had to cover their positions, and you saw a 20% bounce. I'm not saying we're seeing a 20% bounce. I just need a modest bounce. If we go to 20, then my 15 calls worth 5, and I've almost doubled my money.
All right. Not a bad trade if you can get the stock to rip up. Hey, Alan, do a peace sign again for me.
No, because I've got something.
Something on the Skype or something. I'm not
falling for your tricks anymore.
I appreciate the trade. Thanks, Alan.
Thanks, man.
Chief Market Strategist at bullseyeoption.com. All right, buying in the money calls on Levi, looking for a comeback, chasing the money flows.